Hi, welcome. This is Mary Ellen McGonagle with your Daily 5 for Monday, February 27th, 2023. For those of you not familiar, I do have quite a bit of experience both on and with Wall Street. I did advise top portfolio managers and analysts on the broader markets as well as stock selection for 15 years while with William O'Neill and Company, founder of Investors Business Daily, a publication that's all about getting investors in front of high-performing, fast-moving stocks. About 7 years ago, I did found my own research firm, MEM Investment Research, which is currently being powered by simplertrading.com. I do have a top-performing MEM Edge report, which you can find out more about at my memedgeresearch.com. So to begin, I did want to share with you that with my time at William O'Neill and Company, I did uncover quite a bit about what drives the market. And this was information, again, that I did share with professional money managers. And now I have the pleasure of sharing it with self-directed individuals as well, self-directed investors as well. So one of the key and most critical items that I did learn with my time at William O'Neill was the fact that strong earnings are the primary driver of stocks that go on to far outpace the markets. And I'm pointing that out because several of the names today will have just released their earnings. And then we'll talk about other stocks as well. So to begin, I do always like to share with you the broader market indices, and this is a daily price chart of the S&P 500 going back to Friday, February 24th. And we did have a bit of a pullback in the month of February, certainly contrasting to January's bullish run. And of note is the fact that the S&P 500 closed below this red 50-day simple moving average, very critical area of potential support. However, it did find support at this blue 200-day simple moving average. But more notable is the fact that the RSI, that relative strength indicator, and your stochastics are now in negative territory, indicating that the S&P 500 is in a near-term downtrend. We will need to see how this index responds and relative to price action and these key areas of support and resistance going forward. But at this juncture, overall, there is a near-term negative bias for the markets. So let's jump right in, take a look at some of the names that I'm closely examining here and would highly suggest you do the same. The first three stocks are going to be in that consumer staples area, given the market shift into a bit of a certainly less positive space. I am looking more closely at these consumer staples names. So first up here is Clorox. CLX is the ticker symbol. And we can see earlier in February, the stock had this big gap up, and it was in response to strong earnings. Clorox reported 48% year-over-year estimates above estimates, and then also 48% year-over-year earnings growth. So very strong numbers. In response, the stock had this gap up into a base breakout, which is one of the strongest base breakout formations because oftentimes from there, the stock can go on to higher highs. Now, what we can see what has occurred since then is the stock is finding support at this upward trending 10-day simple moving average. And then your outside momentum, that would be your RSI and your MACD, remain in positive territory, indicating the stock is in an uptrend. Of note also is the fact that Clorox is a 3.1% yielder, which is also of comfort given the current market. Next up in that staples area is Molson Coors Brewing. TAP is the ticker symbol. And this is another company that came out with earnings above estimates and experienced a gap up. And this actually is a cup with handle base breakout that took shape. Now, I did not mark this up simply because the stock initially had a very big gap up, but pulled back rather significantly. And this is from last Tuesday when the broader markets were under selling pressure. But also of note subsequent to that is the fact that the stock settled in quite nicely and remains in a confirmed uptrend. The company reported earnings that were 60% greater than the same quarter a year ago, and then also well above estimates. They are seeing strength in some of their brands such as Miller and Coors Light. Also have noticed the fact that TAP is a 3% yielder. And as the stock remains in this uptrend, we can see that the outside momentum, that's your RSI and your MACD, are in an uptrend. Note this black line up through the red that took shape after the release of earnings, and that is indicating that this downtrend has now reversed into an uptrend. Next up is a bit of a smaller company, Ingredion, INGR, and the stock did also report earnings back in earlier in February. However, this particular group was out of favor. It's only recently that the stock has leveled off and entered into a nice uptrend as it ticks above the 10-day, 50, and then 21-day simple moving average, all of that taking shape on above average volume, which is constructive, indicating the stock is in an uptrend under accumulation as it potentially forms the right side of a base. We can see that the RSI is in positive territory, and the MACD is just now experiencing that black line up through the red, indicating a new uptrend as it enters into positive territory. INGR has a nice yield as well at 2.8%. Next up is a stock, and this is more of a turnaround candidate. It is not earnings related. The company is EQT Corp, and we can see that on Friday, the stock experienced a significant move of almost 7%. The move pushed the stock back above this 50-day simple moving average, which can often act as resistance. It did occur on above average volume. However, of note is the fact that the RSI is now in positive territory. However, that MACD has experienced that black line up through the red bullish crossover. I would wait for it to enter into positive territory before potentially nibbling on this stock. The company is a leading natural gas producer, and of note is the fact that natural gas prices have reached a low, certainly earlier in February. Nat gas was up about 8% last week due to a cold snap that's taking shape across the country. So that could be one reason for this shift. But the primary reason that this stock experienced this significant move is due to a Wall Street upgrade where they raised the price target for EQT to $47. The stock is currently in the $35 range. Last up is a well-known company that reported earnings last week, and that is NVIDIA, a major provider of semiconductor chips. And I'm pointing out to you here the fact that the stock did experience a 14% gap up on the release of their positive earnings. The earnings were negative, however, they did come in above estimates. And more importantly for the company was their outlook regarding chip growth among AI applications as well as data center. So that really drove the stock price up quite a bit. We can see that gap up into a base breakout that I spoke about earlier, and it did occur on very heavy volume on a day that otherwise was not very constructive. We can also see the RSI up here in positive territory trending upward. Your MACD already had been in positive territory. Subscribers to my MEM Edge report will know all about NVIDIA, primarily because we added it to my MEM Edge report's suggested holdings list back here in January upon its move above these areas of resistance as the semiconductor industry group also turned positive. That's it for today. Everyone have a fantastic trading week, and I'll look for you again here very soon.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.